Hello, I'm Dan Basse, President of AgResource here in Chicago. We want to talk just a minute about the macro environment that is affecting the grain markets, the livestock markets, and commodities in general. The U.S. Central Bank in the middle of June indicated that it was going to keep raising rates to get inflation back into its 2% target. Now, it didn't lay out a time frame for that to happen, but it's expected that the runway will be sometime into the earlier middle portions of 2023. Now, what rate of inflation is always going to be key? We talk at AgResource about the natural rate of inflation. That means that over the past 10 years, that natural rate of inflation has vacillated between maybe 1 and 2%, an average of 1.5%. It looks like the new natural rate of inflation based on wage pressures will now be in that 2.5 to 4.5% range. Normally, interest rates have to be 2% above that natural rate of inflation to really cause inflationary expectations to be diminished. With that in mind, we kind of think that maybe the Fed doesn't stop at 4%. Maybe they could move on up to 4.5 or 5. Either way, the probability of the U.S. having a soft landing has been diminished and will be, of course, diminishing as we look forward. The overall view in commodities is it's hard to be long of anything that virtually is seeing deflation of price in this environment. And so we do get supply rallies in the grains and livestock. And with those rallies, we will be making sales recommendations. Where exactly is going to be the question? We hope that the USDA crop report on September, next Monday, gives us those kind of clues in terms of how high can we expect the rallies to occur. But I wanted everybody to be aware, this is a much different economic landscape than we have seen in recent years. Maybe the closest corollary goes back to the 2007 to 2009 timeframe. Commodity prices generally fell then. We're not in that stage just yet, but I do worry about the demand profile as the U.S. Central Bank takes that blunt instrument called interest rates, the hammer, if you will, and pounds the nail, which is demand, which of course is something the markets will be looking forward to after the USDA crop report, both in September and October. Dan Basse from Chicago, wishing you well. We'll be back next time.